All right, welcome everyone. So this is going to be the weekly recap as well as yesterday's daily trading recap. And so yesterday was the 12th of August, and all in all, the total account is up 185% since the beginning. For those of you who don't know, about a month and a half ago, a little bit more than that maybe, I developed a trading strategy to trade options, basic options on the S&P 500, and I started basically a small account with about $1,000 in it and started growing it from there. If you're interested in seeing the beginning videos, you can go back and watch those. And I've been just kind of nicely trying to grow this account since then. Just again, kind of playing around. I mean, I'm taking it seriously, but still just kind of playing around and see where we can get this account to go. And so again, this is the overall growth of the account. We had, as I said in the last videos, last week we had a nasty red day, kind of adjusted the strategy a little bit, trying to be more mindful of things during the trading session. So that way we can hopefully avoid these big red days. I'm sure they will come. You can't avoid all of them, but having two really big red days in a row really took a chunk out of the account right there. And as of today, we were able to push it back up just shy of the all-time highs. Today, let's see, we ended the day in the green, $263. One of the best trades that we had. Well, here's the weekly growth of the account. So on the week, we're up $708, 32%, and so on. Let's jump over here to the Patreon only channel on our Discord server. So this is our Discord server here. We have a Patreon only channel where all the patrons are allowed to kind of hang out in this kind of closed in environment. And we start off most days with Sasquatch doing some really super early morning analysis on the Forex market. Sasquatch is a beast, awesome trader, does wonderful, as well as Jay here, our admin. Hasn't been as active the last couple of days, trading futures, calling out stuff on the futures market as they come up. Sometimes things are a little slow, and that's all right, it happens. And so as you can see here, early morning Sasquatch is pumping out a lot of that really great analysis. And so I then around 9:30 jump onto the Discord to start the day trading the S&P 500. That is the strategy that I develop, is to trade the S&P 500, the SPY, and only the SPY, just using, again, basic options, basic calls and puts. And so I typically try to avoid trading the first 15 to 20 minutes, 30 minutes of the day. Around in that area, things can get super crazy and choppy and flip around really quick and get you in a lot of trouble if you're not careful. And so I try to avoid that. So, all right, we started the day off just kind of watching the market. Let's go ahead and jump over to the chart here and take a look. And so we get a little bit of a gap up. Yesterday was a nice sell-off. Then we gapped up in the pre-market, and we on the open sold down, immediately spiked up, and then started selling down again. As that happened, let me move this line there. You can see this candle right here got a really big spike in selling activity as this came down and spiked its way straight through the open price, and again, really big selling activity right there. And as that happened, it kind of caught my eye. I thought, okay, a lot of people have been saying that we're right at the top of a very long trend line right here, and we should be looking for the market to turn and start to drop down. And so as that happened, again, it caught my attention. I thought, okay, we're going to make a nice push to the downside. And so the first trade that I called out was these puts right here. I call out all these trades live as I'm taking them for the patrons to see. And so at 10:07, I said that I was going to jump on some puts. And so That was right here, actually, on the open of this candle right here. I don't think it was quite the open. So we had this strong push down with this one. The candle got bought up quite a bit, but then we got the very next candle started to push down again in red, looking really decent for a short position and things to tumble down. A continuation basically of what yesterday was doing. And as this candle opened right here, it started to push down. You can see this wick on the end of it right here to the downside. As it started to push down right there and show red, I went ahead and pulled the trigger on some puts. But to my surprise, immediately they spiked it straight back up over the open price, and immediately I went ahead and stopped out of that position. I think it was actually right here as this one. I think it gave it just a second to see if this was going to recover and push back down, or if it was going to push up. And as this candle started to push up green, went ahead and pulled the trigger, full stop on that position. Took a nasty little hit first thing right off the bat there. And then we jumped here. And so let's go back over here. And so the next one that I called out was the calls. And so my thought process on this was that we rejected this area, the low here, really hard with this big green candle, and started to push up. And I saw this green candle right above the open price right there. It looked like it was going to come up and test the high of the day so far there first thing. And so as this candle closed in green, I had my eye on this next candle, and again you can see that it actually started to push up green and break above the wick of this candle. And as it did, I pulled the trigger on some calls. And this one, unfortunately, I stopped out a little bit quicker than I should have. But with this one right here, the really big hit that I took right there on that one, I really didn't want this one to go against me really strong. And so as it pulled back right here, actually as it, let's see, so it, let me look here. So I called out the full stop at 10:16. And so right here, I believe, no, I think it was actually on, yeah, it was actually on this one right here. And so I entered as this candle pushed up right here into the green, but then as you can see, that green got bought up and it came down and closed in the red. And the low of this wick right here, the low of this candle, the wick of this candle right here, I was watching and I said, if this candle opens and immediately rejects and starts to push up, then I'll stay in the position. If it comes down and starts to push below the low of this candle, I'm going to go ahead and dump the full position and just get out of it for a slight loss. And as it did that, exactly what I said, it pushed down below the low of that candle, the wick, and I went ahead and dumped the whole position. It did make a spike right here, and as it made a spike right there, that would have gotten me to first take profit and at least shielded me a little bit from taking such a big loss on that position. But it happens. Sometimes you just cut positions a tad bit too soon and miss it by literally seconds. And that's okay, because it did end up coming down really hard right here, and I would have gotten stopped out anyways. That would have just saved me just a little bit of the red. And so by the time all that happened, I was super frustrated already. First thing in the morning, getting just bounced back and forth. And I even called out that today wasn't looking too good. And so I wasn't too quick to jump on anything else. I just kind of sat there and watched to see what was going to happen. As price pushed down again right here, I thought maybe we were going to end up in some more puts and we were going to continue that short position, that short side push from yesterday. But as these candles kept closing, they kept getting bought up, and then they would come down, close slightly lower, but then as soon as the next candle opened, they would get bought up, and they kept doing this. And as they did that, I wasn't too interested in taking a position, because obviously the bulls were in control here, trying to push things up. And so as the price curls up right here and breaks above the high of the day, That looked really good. It was able to kind of sustain that with this candle, didn't immediately sell off like some of these other ones. And so as this candle closed, this one opened, we started to push up green above the high of this candle, went ahead and pulled the trigger on these calls right here at 10:18. But then immediately it started to push down against me again. Wasn't quite enough to stop me out, but I was really starting to bite my nails on this one. I thought I'm going to take a really nasty hit on this one as well, but it was able to kind of start to curl and push back up, making another high right here as it broke out above this candle in this area there. And then to my surprise, the rest of the day, this thing was just a beast. I rode out, I took first take profit, so I exited one contract, held two of them, and just continued to ride this thing as it went higher and higher and higher. It is amazing sometimes how far price can go, just kind of with no real rhyme or reason. It just continues to break higher and higher and higher, all the way up into this zone that we had marked out in green, and still continue to push higher and higher and higher, all the way up into power hour. I was watching this thing and I ended up dumping the position right here as that candle right there came down, and then this candle broke the low of that candle right there. I said, yep, I'm done with it. I'm gonna go ahead and dump the position. That was enough to get me out of the red. I think I was down around $300 on the day whenever I started into this position. It was enough to get me out of that enough to get me out of that red, and enough to get me into the green by the what was it, the $263 on the day. By far, I think this was the best trade that I have gotten since I started trading this strategy, this small account and stuff. And so at the peak, I think I actually sold a little bit more than this. I think it was up around in the $600 by the time it was all said and done, around a 70% move on these two contracts. That is absolutely mind-blowing when it comes to a small account that you can get that kind of gain. And so super awesome way to end the week. I definitely wish it could have been better, but that puts us right back at, again, the all-time kind of account high. For the week, things were interesting. You can go back and watch the daily recap videos, but basically this was kind of the start of the week right here. All these areas that I have marked out with different colors here are all areas of support and resistance. The vertical blue and tan are pre-market and aftermarket. You can see here that we got a few really choppy days. Monday was an okay day, kind of chopped around a little bit. Tuesday was just horrible. Things didn't move at all. You can see it just went completely sideways. Then on Wednesday, we had this massive gap up, which caused price to just go stagnant again and just trade completely sideways. Yesterday, we had a really nice day. We were able to squeeze out some really decent profits on that. And then, of course, today, we were able to ride that explosive move to the upside and get some really good profits on the day. And so all in all, not a bad week. And you'll often see this where we get a few days out of the week. Sometimes it's more days of consolidation than it is trend. Some days it's more days of trend than it is consolidation. But you see this pattern in the market where we'll get a push to one side or another, either up or down, and then you'll get some consolidation. Then you'll get a push, then you'll get some consolidation. And that's just how the market moves. The idea is to just keep your bad days, the days of consolidation, try to stay out of the market as much as possible, taking small positions, just treading water, and then on days that we get massive moves, really be able to take advantage of those massive moves like we did today. And so that is the theory. Another issue that people have with small accounts is as they grow the small account, they'll continue to take the same risk as they started in the beginning. In the beginning of a small account, you generally have to risk a lot of money, a lot of your capital per each trade, so that way you can get those really nice big gains to grow the account significantly. And often what people will do, one of the mistakes, is that they'll continue to take that risk and continue that same level of risk as the account grows over and over and over. And so when I first started the account, I was only doing 2 contracts at a time. And then I was able to grow it enough to do 3 contracts at a time. And that gave me a nice, decent balance of being able to take a little bit of profit and then being able to ride out positions. I recently switched. I used to take 3 positions. I used to take 3 contracts. And when I hit first take profit, I would sell 2 of them and let 1 ride out. But we... I was given some advice in the Discord by our admin Jay on trying to flip that. And so when we hit first take profit, we'll just take 1 contract off the table and let 2 ride. So that way we can really try to maximize on our big, long, good positions. And so that's what I've been doing. And at this point, I could technically be buying 6 contracts at a time and really just jumping. I mean, if I would have done that, then obviously today's gains, this week's gains would have been doubled. And so we'd be growing again very significantly, but also the problem is that your losses continue to be extremely big. And so that is a gamble that you really don't want to continue to take, because eventually you're going to blow the account. And so the idea is to continue to grow the account, but continue to add more and more buffer in between you and blowing the account, the total amount and the amount that you're risking. And so the further away you have, and so for example, if I was trading, say, an account with $10,000, realistically, if you had an account with $10,000 and you were trying to make a living off of that account, grow it and continue to take consistent gains and profits off of it, then what you would want to do is, in this particular instance, I would risk no more than $2,000 at a time. That's full risk, like full position, $2,000. If I lose all of it by some freak incident, then I can sustain that account and continue to grow it, because I'm not going to take 10, or I'm not going to take 5 of those losing days back to back to back. It is kind of the idea. Even this is a little bit risky. And so the idea, again, is to add that buffer in between you and the account to where you always have a lump sum there and you're not risking too much. And so, and even at that, the $2,000 position that I would take, I'm only risking somewhere between 10 and maybe 15 or 20% on each trade. And so again, that $2,000 is just an absolute fluke. If something happens, say I got in a car wreck, God forbid, or something happens and I lose internet access and I can't do anything with the contracts on the day and they expire at the end of the day, completely useless, completely no value to them whatsoever, then I've lost that investment. And so that's kind of the idea. Just a little bit of advice for any of you who are trying to start off with a small amount of capital and grow it in this fashion or some other fashion. And so, all right, that's it. I'm going to call it here. We're not going to do a indicator video today. We'll just do the weekly recap and the yesterday's daily recap. And hopefully on Sunday, we'll have another video by Jay on kind of trading basics and some knowledge-based stuff. If not, then maybe I'll do one on just some basic trading information or something like that. But yeah, that's it. We're going to call it here. I will see you on the next video.